Well, it's that time again. James the Goat Stevenson, who you should all be following over on Twitter, has posted his epic Tesla charts thread, updated with the latest figures and some estimates over the next couple of years. Going to be running through some of the highlights. Shout out to James, he's an invaluable asset to the Tesla community. This thread is catnip for autists, and I highly recommend if you own Tesla stock or you don't own Tesla stock, stick around. And before we get to this thread, just a quick update. I'm posting so much exclusive content, I'm losing track. 20-minute video this morning, available exclusively to my Twitter subscribers, which would get me cancelled if I posted it anywhere else. Not joking. More exclusive content dropping on Patreon. So if you'd like more content, including a lot of stuff I literally can't post publicly, click the link to the pinned comment, subscribe on Twitter, and also join Patreon. Or don't, I won't be mad. First up, Tesla quarterly deliveries by model and site, as in factory. I've got actuals through to 2023 year to date. And then James has some forecasts. You can see those differentiated along the bottom. Now, I don't want to spoil the whole movie, folks, but I'm going to. You may notice a recurring theme throughout today's video. Numbers go up. Charts go up. Very up. We can see here, Model S and X produced at Fremont going absolutely nowhere. Very low volume vehicles. I've said it before, I'm going to say it again. Tesla could delete these and it wouldn't make a fucking difference. People get mad and they wouldn't have a great place to debut new technology, but they're irrelevant specs in the scheme of things. Fremont producing reasonable numbers of both the Model 3 and the Model Y. Shanghai comparable numbers for the Model 3, but importantly, in yellow here, Shanghai Model Y production really carrying the company in terms of vehicles produced and delivered. Model Y will no doubt become the world's best-selling vehicle by units sold this year in 2023. It's the sole vehicle currently being produced in Austin. Cybertruck will come, likely in Q3, but for now, Model Y is the only vehicle being produced at Tesla's currently ramping Austin factory, and that is also true in Berlin. They are only producing Model Y. Oh, and in 2024, the year after Tesla's Model Y becomes the world's best-selling vehicle by unit volume, Model Y is also going to be the world's best-selling vehicle by unit volume, by a significant margin. I personally expect over the long term, Model Y alone, when fully scaled and costs have been driven down as much as possible, combined Model 3 and Y sales per year will be somewhere around that 3-4 million mark, with Model Y alone accounting for about 75% of those sales. If you reverse engineer my statement, world's best-selling vehicle today, give or take, round it down to about 1 million units sold per year. Meaning that if I'm right, Model Y could be selling 2-3 times as many vehicles per year as the world's best-selling vehicle has ever sold in a single year prior to Model Y. Let that sink in. We're now looking at Tesla global deliveries by quarter. Historical data along the bottom here, and then forecasts from 23 to 25. Now you might notice something. The trend, once again, is up. Very up. It's worth noting that as Tesla introduces new vehicle models, they still continue producing other models as well. So each of these vehicles is additive to overall volume. New model, more vehicles sold, still selling many of the previous vehicles. Now it is true, there is some cannibalization. When the Model 3 came out, a lot of people who previously only had the choice between a Model S and X thought, you know what? 3 is going to be fine for my needs. I'm not going to buy an S or X. 3 is much more economical. It'll suit my needs fine. Then the Model Y comes out and a lot of people think it's only a little bit more expensive. It's much bigger. I'd prefer an SUV. F*** the Model 3. I'll get the Model Y. The same will also be true when Tesla releases their next-gen $25,000 vehicle. It will cannibalize some sales from the 3 and Y. 3 and Y will still continue to sell in insane numbers, and the $25,000 Tesla is just going to take things to a whole other level. Now, if we work backwards from James's forecast here, looking at Model Y, his estimates late 2025, in a single quarter, about 500,000 vehicles delivered. Annualize that, about 2 million Model Ys sold per year by mid-decade. I think he's right. Could be a little more. We're now looking at Tesla global deliveries, Model 3 versus Model Y. Model Y in the darker grey, Model 3 in white. And once again, we can see a trend, increasing Model 3 sales over time, but once the Model Y production began, we actually see a bit of a decrease in Model 3 sales, although overall they're still growing. But as I mentioned earlier, a lot of consumers who previously only had the choice of an S, X or a 3 thought, you know what, Model Y, it'll suit my needs, I'll buy that instead. James, in essence, estimating that Model 3 deliveries will continue to grow a little bit over time, but not meaningfully, while Model Y goes to the fucking moon. And just to make a correction on my eyeballed guess of around 500,000 units in a single quarter earlier, the actual number James was using was 568,892. Now again, just to remind everybody, the world's best-selling vehicle ever, in a single year, you're looking at about 1 million vehicles sold. So based on James's own estimates, he's expecting the Model Y to be outselling the world's best-selling vehicle previously by about 2 to 1. And notice the trend, up, very up. What do you think 26, 27, 28, 29 look like? That's a good question, something to ponder. And now, trigger alert. If you happen to be a Tesla short seller and or a panicky, emotional, quote-unquote investor who's actually not an investor, but an infant who somehow found their way into the stock market, not cut out, doesn't have the right equipment upstairs, and everywhere else to actually be investing without making idiotic financial decisions. What we are looking at here, Tesla quarterly production and deliveries. Production in red, deliveries in the dotted grey line. Now, let's examine this for a moment. Do we notice a trend? Oh yeah, that's right, up, very up. Quarter after quarter, Tesla produces and delivers more vehicles. Despite what many of the Tesla bears, most of them very intellectually dishonest or just mentally ill, will claim, Tesla keeps producing more vehicles it can sell every quarter, there's no demand. We can clearly see that is a load of horse shit. There's always going to be some variation between the number of vehicles produced and delivered in a single quarter because, as I've said 10 trillion times, Tesla doesn't have a gigafactory in the front yard of every customer purchasing a Tesla vehicle, meaning it actually takes time for the vehicle that's been produced at a gigafactory to end up in a customer's driveway. And until that happens, the vehicle is counted as produced but not yet delivered. Now, I hate to point out the obvious, but did you know that if you put a vehicle on a boat and that boat must cross to the other side of the planet, that actually takes a little bit of time? That vehicle is considered in transit, not delivered, produced but not delivered. And then next quarter, when the boat arrives and gets delivered, now the vehicle is finally counted as delivered. But if you were to ask a Tesla bear, at least some of them, those who are intellectually dishonest, how come Tesla produced more vehicles this quarter than it delivered? Their only answer is, there's obviously no demand. I'd like to add James's commentary to this particular tweet. James writes, Tesla is finally, quote, ending the wave after years of attempting to maximize vehicles delivered each quarter. And this is something that Tesla themselves told us. This is not a hypothesis from James. He's relaying a statement from Tesla themselves. He continues, all that fuss you've heard about Tesla's growing inventory is really just complaining that the solid red line, production, hasn't crossed the dotted white line, deliveries, in a while. Ending inventory levels rise as Tesla smooths global delivery pace, reducing cost per delivery. Again, he's right, and this is important. Some context. Tesla's most recent production and delivery update explicitly contained this line to explain to the dimwits who don't understand this very important fact. We continued to transition towards a more even regional mix of vehicle builds, including Model S and X vehicles in transit to Europe, Middle East and Africa, and the Asia-Pacific region. Tesla produced almost 20,000 Model S and X, yet delivered just over 10,000 of them. The Tesla Q dolts immediately, oh my god, there's no demand, look, they're going bankrupt. The people with a brain who also can comprehend words specifically written in the English language read this sentence and go, oh, I see. There's about 9,000 of those things currently in transit at the end of the quarter. Not a lack of demand, it's a presence of vehicles needing to be transported to customers before they're counted as delivered. I really get secondhand embarrassment having to point this out repeatedly, but bro, every fucking quarter it's the same story. Tesla non-GAAP earnings per delivery, as in per vehicle delivered. Once again, is there a trend? These, of course, are trailing 12-month figures, which smooths out the data. Next chart. Tesla inventory, production and deliveries. All sites and all models. Just to orient you folks around this chart, each quarter is 4 bits of data. We've got beginning inventory at the beginning of the quarter, as in the vehicles that weren't delivered that quarter but were produced, the majority of which are currently in transit. Then you have orange, which is production for that quarter. Then you have ending inventory for that quarter. Again, vehicles that were produced but not yet delivered. They're in transit. And then in green, you have total deliveries. We've got 2018 through to 2022 here, and then James's forecast on the right. Again, the trend is up, very up. Notice, without exception, every single quarter, Tesla begins the quarter with some inventory and ends the quarter with inventory. Again, sorry to have to point this out, but it takes time to deliver vehicles to customers, so you have to expect this. It's not a sign of a lack of demand if Tesla needs to put vehicles on boats and onto trucks to deliver them to customers. Yet every single quarter, Tesla bears, there's a gap between production and delivery, must be no demand, Tesla's going bankrupt. Over and over and over. In the early days, Tesla was fighting and clawing for every last vehicle to be delivered that quarter. They paid expedited shipping. They'd have staff, executives, high-level employees hand-delivering vehicles to customers just to deliver as many as possible that quarter. They're no longer playing this dumb game because it doesn't make sense. There's no point to pay expedited shipping and massively increase your cost to get vehicles to customers a few days earlier than you could have otherwise, just to appease some dimwits on Wall Street to hit a certain quarterly delivery number. And Tesla's now said this, they're no longer playing that game. What one must do to understand what's going on with Tesla production deliveries is to look at the historical data and the trend. Is production going up? Yes. Are deliveries going up? Yes. Then the beginning of quarter and end of quarter inventory is irrelevant. We're now looking at Tesla average revenue per delivery versus Tesla's automotive gross margin, excluding regulatory credits. Green bars, gross automotive margins. Grey, average revenue per delivery. We can see quite clearly Tesla's average revenue per delivery collapsing from 2018 to 2019. Now, why did that happen? Spoiler alert, it's called the Model 3. Tesla's delivery skewed heavily towards S and X, which obviously, very high margin vehicles with higher selling prices. The reason that margins looked a little bit low despite the high selling prices is because at the same time that Tesla was delivering these highly profitable S and X vehicles, they were also ramping up Model 3 production capacity, dragging on margins. Those early Model 3s had abysmal margins because Tesla was at low volume, but as they ramp volume, margins improve. So despite the fact that Tesla's average selling price has gone from close to $90,000 at the beginning of 2018, with margins in that period of time around the 20% range, Tesla's now an average selling price per vehicle of under $50,000, yet their margins are still around that 20% level. Now obviously there's fluctuations and variations quarter after quarter after quarter. We'll note here, Tesla got absurdly high in terms of their margins from 2021 to 2022 for a period of time. Elon talking about this, describing Tesla's prices as literally embarrassing. They didn't want them to get this high, but they had to. They couldn't produce anywhere near enough vehicles to meet demand, and they didn't want customers to have to wait absurdly long times. I mean, wait times blew out to 6, 9, 12 plus months depending on the region. This was unreasonable. Who wants to order a new vehicle and have to wait upwards of a year to take delivery? And now as Tesla has scaled up their production significantly, they've been able to cut costs and pass those cost savings along. If we actually look at the average Tesla margin, gross automotive margin over this window of time, give or take, it's probably about 22%. I haven't done the math, that's just an eyeball guess. Q1 2023 was around that 19% mark and people lost their fucking minds. Yet look where we were a couple of years ago. In 2020, 18.7%. In 2019, 17.2%. And remember, Tesla's costs are still plummeting. Their margins will increase automatically if their prices stay the same, or Tesla can maintain approximately the same margins that they have today, yet still continue cutting prices and selling through a ton more volume. Perspective matters. This is a very interesting chart. Tesla average revenue and cost of sales per cash delivery. So it doesn't include leased vehicles, and there's no regulatory credits here either. The white line here, vehicles delivered, not including those that are leased. In red, average selling prices, not including leasing and regulatory credits. So we can see the average selling prices collapsing down to the mid 50,000s and then to the $50,000 range, give or take. We could also see Tesla's cost per vehicle sold. Notice the trend down. Makes sense. This is called economies of scale. The more of the things you're making, the less the cost per thing to make is. And the same is true in reverse, which is a big problem for legacy automotive manufacturers whose ICE vehicle sales are currently collapsing. Their cost per vehicle sold is going to trend up when they can least afford it. And this is a very interesting chart. Tesla average FSD revenue at time of purchase per delivery in thousands of dollars. There's also a forecast toward the end here, so keep that in mind. So on average, Tesla making a few $1,000s per vehicle sold because some customers are purchasing FSD at time of purchase. Now you'll note something here is a huge leap. If I didn't know any better, I might suggest that James believes that Tesla will have solved autonomy in at least some major regions globally by late 2025, meaning the take rate on their FSD software goes through the roof. For what it's worth, I personally believe the very first Tesla Robotaxi fair will take place somewhere on Earth toward the end of 2024, around here, and it will take time to roll out to improve in other geographies, but their rollout will be fairly quick, and I also believe the take rate for FSD will go through the roof at this point in time. The price of FSD may also go through the roof. Now this is a big variable in terms of Tesla's valuation over the next couple of years. The timing of autonomy, when they actually solve autonomy to the point where humans no longer need to supervise, it's safer than human driven, and you can literally go asleep in the back seat and end up at your destination. I think Tesla stock's pricing this in just the tiniest amount, but most people still remain skeptical. It's not going to happen, won't happen this decade, it's a scam, other people will figure it out, it'll be commoditized, etc. blah, blah, blah. Don't sleep on autonomy. I got to read the commentary on this one as well. Here's a handy resource you can provide to anyone trying to convince you that, quote, the growth story is over. If their 2023 deliveries forecast doesn't fit into the dashed box, ask them how much brain damage they're oh wait, he didn't say that, I said that. Ask them how that can be. If it does fit in the box, show it to them again after those deliveries get reported. They say repetition is the mother of skill. So, to repeat myself, here's a question I've already asked a few times. Does anyone notice a trend with Tesla global deliveries from 2018 to 2023? Spoiler alert, up. Very up. Now I'd like to highlight something, because this happens every year. We've just seen it happen again. Notice, Q4, record deliveries. Q1 the next year, big decline. That occurred in 2018. Is this a one-off? Well, let's look at 2019. Q4 2019, record deliveries. Q1, a big drop. Isn't that curious? How about 2020? Q4, 180,000. Q1, just a smidge over. Whereas throughout the year, big jumps quarter over quarter. The trend repeats itself in 2021. 308,650 vehicles delivered in Q4 2021, but big increases all throughout the year. Then in Q1 2022, just a mere 310,048 deliveries. And again, the trend throughout the year is up, very up. So the question, do you think Tesla deliveries for 2023, we've already got the first bar here, will fit in this box? And now my favorite chart by miles. It is absolutely no contest. Seriously, this chart alone almost paints the entire picture when it comes to Tesla. Tesla quarterly revenue in millions of dollars from inception to present. 2009, Tesla did $73 million of revenue for the full year. 2010, $116 million. 2011, $204 million. So little revenue compared to future quarters that the sliver is so small it doesn't even take up a single pixel on this chart. This is what we call hypergrowth. 2012, $413 million of revenue, a tiny sliver. In 2013, over $2 billion. 2014, over $3 billion. 2015, over $4 billion. 2016, $7 billion. 2017, approaching $12 billion. 2018, $21 billion. 2019, almost $25 billion. 2020, over $30 billion. 2021, over $50 billion. 2022, over $80 billion. And in 2023, already, just in Q1, over $23 billion in revenue. Do you notice a trend? Yeah, I'm not going to finish that. You guys noticed the trend already. I do not need to repeat myself that much. But it's really worth taking the time to examine this. If you just focus on Q1 alone, the very first bar in each of these years, you'll notice something. It's growing at an exponential rate. For example, Q1 of 2021, just the first quarter of the year, just a few years ago, Tesla's Q1 revenue was more than their 2018 Q1 and Q2 combined. But if we go back a further year to 2017, Tesla's Q1 revenue in 2021 was more than the first 3 quarters of revenue in 2017, almost as much as the full year. Go back to 2016, Tesla did $7 billion in revenue for the full year, and in Q1 in 2021, they were significantly above that amount. For the full year, they ended up doing $53.8 billion. More context, Tesla's Q1 2023 revenue alone was more than the first 2 quarters of 2021. Now, I'm not great at math, but let me count here. 1, 2. So 2 years later, Tesla's revenue has increased so substantially that they've done more revenue in a quarter of a year than they did in half a year just 2 years ago. This is called exponential growth. This is one of the core reasons why Tesla, I believe, warrants a very high multiple. They are growing at a stupid rate. They're already at ridiculous scale. I mean, we're talking about $80 billion of revenue last year. Just imagine what this will look like when the full 2023 is in there with every quarter. I have a suspicion that 2012's little sliver of $413 million is going to disappear. Something to consider. And now regarding valuation, we're looking at Tesla's PE ratio, compression, and range. I don't want to get too nerdy for the people that aren't super finance nerds / on the spectrum, but to put this in the simplest terms, the higher this number, the more generous Tesla's valuation, as in the more, quote, expensive the stock. The lower this number, the, quote, cheaper the stock. Now, I personally believe what's happened with Tesla's multiple compression recently has everything to do with the macroeconomic environment and people who care about things that don't actually matter, rather than Tesla's performance, execution, or future as a company. The thing to really underscore here is based on these metrics, Tesla's stock is now cheaper today, as I record this, than any point over the last 3 years. Now, this ain't investment advice. These are just numbers that illustrate how Tesla's being valued versus historically speaking. Make of that what you will. Now, some context might matter. Tesla's PE ratio at this point in time is in the same vicinity as companies like Apple and Amazon, who, while money printers, are not growing at a particularly fast rate. The quarterly high PE for Tesla here got up to 56, quarter end at 54. As I record this, Chipotle, the extremely disruptive burrito company, has a current PE ratio of 53.94. That is right, ladies and gentlemen. As I record this, the stock market is valuing Tesla about the same as it's valuing Chipotle. The question I have is, does this make sense? I definitely don't know the answer. That's why I'm asking you. Now, we're looking at Tesla operating expenses in millions of dollars. Again, we've got actuals through to Q1 2023 and then forecasts beyond that. As we can see, as Tesla scales their business, their operating expenses also scale. By the way, more commentary from James here. He's right, and it's hilarious. Some Tesla haters like to claim that Tesla's operating expense numbers must be fraudulent because they aren't increasing by enough. And he's right. Like, I've heard this argument repeatedly. It's hilarious. The reasoning, or lack thereof, goes like this. There's no way they could be that efficient. Therefore, they must be committing fraud. Because I hate Elon, and I need to justify my hate for Elon, and therefore hating Tesla, and therefore I'm going to use the reverse Occam's razor rule and Find out the most complicated explanation for anything rather than the most obvious, logical, and simple. And now James has also broken it down. This chart shows the subcomponents of just the selling, general, and administrative expense portion within the larger operating expense grouping. It's very important to separate these things out. And again, Tesla's scaling, you would expect that their expenses will continue to increase. However, the thing that matters the most is that Tesla's profits and revenue are scaling at a much faster rate than their actual expenses, meaning they're printing more and more money as they increase their scale. Another one, I'll read the commentary on this as well. Here's a fresh chart, hot off the press today, showing how big a deal Tesla's 40 gigawatt per hour Lathrop Megapack factory will be for total Tesla energy storage deployments, including Powerwall once ramped. James also notes, and Tesla is building another 40 gigawatt hour per year Megapack factory in China. Check out the chart. Latest available data in red here, forecast in grey. Does anyone notice a trend? Yeah, I thought so. Don't sleep on Tesla Energy. I mean, this thing really is a sleeping giant. We've got two new massive energy storage factories right now ramping up. Well, ramping / being constructed. Same shit. Like I said, sleeping giant. Now, a simple chart that even a Tesla short seller could probably understand, at least if they try. Or maybe I'm giving them too much credit. Tesla non-GAAP EPS, earnings per share. Do you notice a trend? Very up. But of course, according to many who are panicking right now, clearly this is going to reverse dramatically now, obviously, because it can't keep going up, because that would make Tesla one of the fastest growing, most profitable companies of all time, and that could never possibly happen. By the way, guys, I started the YouTube channel in 2019. I was pretty much just trying to point out that this was going to happen. Hey guys, Tesla stock, hello. And well, this happened. And now today in 2023, I just want to say, remember in 2019 when I said, hey, that's going to happen? Guess what? That's going to happen again through the rest of the decade, in my opinion. Keeping in mind, I'm just some idiot who doesn't know anything and never made any predictions about Tesla that have ever panned out. We're now looking at Tesla operating cash flow, which is their capital spending and free cash flow combined over the trailing 12 months. In white here, free cash flow, and in the grey, capital spending. We'll note that Tesla has gone from essentially negative cash flow to multiple billions of dollars of cash every quarter. And their spending has increased as well, but not in proportion. We'll note that as Tesla prints many billions of dollars more, they can also spend many billions of dollars more in scaling up their production, improving their technology, driving their costs down, and spending billions of dollars on ads to manipulate. I'm not going to even go there. Just couldn't help myself. So as these charts have clearly demonstrated, the competition is coming. Tesla's going bankrupt. The growth story is over. Tesla doesn't have anything Toyota doesn't have. Tesla's profits will continue to collapse because they're cutting prices because there's no demand, not because it's in their 17-year-old master plan. They're not able to drive their costs down. Therefore, if they reduce prices, it means they lose money. The end. Being short Tesla stock is a very smart idea. Oh, and also Tesla commits fraud. That's why their operating expenses aren't growing as fast as they should be for a company as profitable and at such large scale as Tesla. They're definitely not capital efficient. They definitely don't have an unassailable lead. Model Y certainly won't be the world's best-selling vehicle this year. James Stevenson is obviously a paid Tesla shill. Shorting Tesla stock's an intelligent idea. Tesla successfully solving autonomy won't make any meaningful difference to the company or their valuation. And just because Tesla is as cheap as it's been on a forward PE basis over the last 3 years doesn't mean that it's a good deal because my emotions said so. And unfortunately, I have learned that there are some people who watch this channel who don't have a sarcasm detector. I'm trolling. Obviously, I have to point that out, but I kind of do. Once again, massive thank you to James Stevenson. He's such an invaluable asset to the Tesla community. These charts are epic. Sometimes a chart really sums things up. Did we notice a trend? We did. Up. Very up. Something to consider, especially given that Tesla stock has done the complete opposite. Down. Very down. Don't forget, posted a super spicy video exclusively to my Twitter subscribers today. Make sure you guys are all subscribed if you'd like to access that content. Loads of exclusive content continuing to drop over on Patreon too, so check the links at the pinned comment. And one more thing, Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to athleticgreens.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to athleticgreens.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.